Preparing for short of what it's truly worth and buyer mind offer may truly be diminishing, it doesn't change the way that the automaker is making great creation figures and has an appeal for its vehicles. In 2021, Tesla Model 3 was Europe's top-selling electric vehicle, surpassing the Renault Zoe and other famous models in that locale like the Fiat, Tiguan, and Peugeot 3008 SUVs. In like manner this year, Tesla's Model A best new vehicle enlistments in Europe. As per statistical surveying information, the status showed that the Tesla SUV is quick turning into a vehicle of distinction in that district. The main considerations that might be burdening Tesla's interest are conceivably the expanded hang-tight times for its vehicles, as well as the climbing vehicle costs throughout the years. While one of Tesla's fundamental targets is to make its electric vehicles more reasonable, the vehicle organization has been compelled to raise costs, and this is affecting Tesla's vehicle interest, albeit not an extremely critical rate. Additionally, sit-tight times for Tesla vehicles had expanded. The Model X actually has standby seasons of as long as 11 months. The interest for these vehicles has been developing, and the automaker has had issues staying aware of the interest for its provisions, which has been deteriorated by issues with expansion. Store network factors like standby times might be making Tesla record a lesser level of its customer purpose volume this year, and by zeroing in on lessening standby times and bringing down vehicle costs, Tesla can get much higher pieces of the pie later on. The automaker previously uncovered that it had cut the conveyance holding up season of all Model 3 and Model Y vehicles to at least multi-week, as per famous business visionary and prime supporter Landon Swan. Tesla is quick to market in the EV business in a genuine way and has the most conspicuous name and brand mindfulness that no other person has. He likewise accepts that Tesla has enormous tailwinds, for example, gas costs and expanded revenue in EVs, which isn't disappearing at any point in the near future. In spite of the fact that Swan sees Tesla is a main organization with a great deal of possibilities, he really does anyway take note of that the vehicle organization has a ton of rivalry coming after it, and this is as a matter of fact valid throughout recent years. A few EV organizations have tracked down their direction into the business and are slowly taking a portion of Tesla's pieces of the pie anyway. This isn't such a great deal an issue for Tesla balls, since it will take a ton to surpass the vehicle organization from its situation as the top driving EV cosmetics. Tesla has arrived at an elevated degree of outcome in the television business, and it could never have arrived at this point with next to no smart courses of action to direct the organization through its haziest times. Elon Musk merits such a lot of recognition for Tesla's prosperity, while the chief of Tesla presently has a ton on his plate in light of this new Twitter business. He is as yet a pivotal piece of Tesla and gains a great deal of esteem for the automaker's prosperity, most likely going after valuable open doors, hearing less of chance and diving carelessly into high-risk business choices might have driven the organization to Chapter 11 previously, yet it has inarguably been a piece of its prosperity. Is Tesla really losing its pieces of the pie to other EV organizations? Tell us down beneath and remember to let us know your valuation of Tesla. To find out about what Tesla's been doing throughout the course of recent days, feel free to tap on this next video on your screen. See you there. Tesla has been encountering numerous issues as of late, from the apparent interest issue to the vehicle organization reviewing its vehicles multiple times in a single week because of programming issues. Individuals are losing trust in Tesla, and financial backers never again need guarantees, however results. Hello everybody, welcome back to Everything. Tesla stock. Tesla has had the option to fight various market difficulties throughout recent months. A few financial backers accept that expansion has kicked in something over the top and request is declining because of lower vehicle costs. The automaker is experiencing a declining stock cost and an apparent drop in its future execution inferable from Musk's new commitment was Tesla, and there's plausible of the FD bringing loan fees again up later on, yet do these variables really influence Tesla or its future exhibition? And might there at any point truly be more to anticipate from the vehicle organization? Well, it's coming this video. However, before we get into it, remember to like and buy in and turn on warnings to move state-of-the-art on everything along on with heads. Live well. Clearly, Tesla's stock cost is simply attempting to grow up the outlines, particularly as expansion and request concerns wait. It is still evident that the card organization is in a decent situation with regards to its funds. Many individuals don't understand how great Tesla's edges truly are. Thus, they judge the vehicle organization by its presentation on the securities exchange. Tesla's functional effectiveness and vertical joining are assuming significant parts of the automaker's overall revenues. The organization sells its vehicles straightforwardly to buyers, evading the showroom model of customary automakers, and contrasted with billions of dollars a year that different automakers spend, Tesla's showcasing costs are immaterial on a cosplay card premise. Tesla's publicizing consumptions in 2020 didn't add up to $1 for every vehicle by correlation. Portage burned through $468 on publicizing for each card sold in 2020, while Alex Spencer's was $394 for every vehicle for general engines for Tesla. As opposed to placing cash into advertising, it spent generously on innovative work. Tesla's upward reconciliation system likewise incorporates batteries. The vehicle organization makes a portion of its batteries despite the fact that it actually gets them from outsider providers. Tesla plans to keep growing its battery fabricating limit, thus expects that economies of scale will assist with driving its costs down further. Similarly, it is likewise further developing its battery innovation. Tesla's 4680 cells is supposed to be practical and ready to store more energy and give broadened and further developed range, which ought to assist it with cutting down the complete costs of assembling Tesla vehicles. Generally speaking, a few variables are assisting Tesla with creating higher edges than its rivals, and apparently, the automaker will continue profiting from these elements for a long time to come. In like manner, once Tesla can tackle creation issues at this new manufacturing plants, it could expand creation to be capable of expected request. Later on, interest for EVs is taking off in such countless regions of the planet, and universally customers purchased 6.6 million module vehicles in 2021. As per a projection from Bloomberg, this number is anticipated to significantly increase by 2025, prompting 469 million traveler electric vehicles out and about by 2035, and this could ultimately increment to 612 million EVs, assuming that the world refocuses towards net no emanations by mid-century. The rush of homegrown strategies in a few nations, very much like the U.S., can likewise send EV requests soaring in these business sectors. The U.S. government has laid out an objective of making half of all new vehicle deals electric by 2030. And new regulation like the Expansion Decrease Act and California's 2035 restriction on internal combustion vehicles is further advancing this objective. While ICE's worth is as yet the predominant market competitor last year, the world is just a single year from a finish to the offer of new ICE vehicles. EV deals were encountering quick development and, surprisingly, performed well during the pandemic, which saw general vehicle deals fall. As of WAC 2022, there were in excess of 840,000 module vehicles enrolled